stock jumped up Friday, and that was EABL. It was the biggest gainer for the day, and the biggest news around that was that Diageo had decided to buy further into EABL. You see, as a retail investor, that will make sense. But today, we're going to look at why that particular stock then has been somewhat hot and cold, to the point where Diageo just came in and said, well, this is the perfect time for us to go in and buy the stock. It is Monday. It's been almost 2 hours of trading. So we're really going to look at what the markets are talking about on the back of the recent fuel price adjustments. If you did see, President Ruto did not live up to his word of completely getting away with the subsidies, because the subsidies do continue, as we're going to look on business news today. But I do have a guest that I'm going to introduce later on once we get to the market segment, who's going to take us through out our show today, and we're going to look back to last week. Q2 numbers. We are back to 5.2% from 11. We're going to ask ourselves the questions why we are back on that. But for now, you can join us online at Lookuptv across all your social media platforms. The hashtag is Lookupbusiness. My name again is Simba. Elijah Charles Kiage. Let's get started. Blocking lines for telecommunication users has raised an uproar across the country following 11.5 million SIM cards being deactivated. Now, the move by the Communications Authority would see an end to online theft with unauthorized SIM users. Moses Okech starts Lookupbusiness off.
On Saturday, 15th of October, was the day that the Communications Authority of Kenya set a deadline for SIM card registration. The directive was effected, leading to a massive uproar from SIM card users across the country. We speak to Jane, a businesswoman who does not feel the need for SIM card reactivation despite using it for 2 decades.
Swali yangu ni moja. Hii laini tunaambiwa turejiste. Hatukatai. Lakini niko na swali moja. Hii laini niko nayo karibu ya miaka 20 ama 25. Nikifanya nayo biashara, naigiza M-Pesa, natoa, nafanya kazi, naenda bali nayo narudi. Swali ni, wakati nilinunua hii laini, niliregister, nikapeleka ID, wakanipa laini. Hawezi kukupatia ID bila laini. Huwezi pewa bila ID hata wapi. Sasa hii wanataka tena nifuge kazi. Niende huko nikakae huko na vile kuna kiangazi. Nikifanya nini? Nikipaga laini nikifanya nini sasa?
Jane's SIM card is still functioning and says if at all it will be deactivated, then she will abort using her phone services.
Hilo vibaya kwa sababu mi wakifuga na achana na hiyo mambo ya laini. Mi nafuga na achana na simu. Kwa sababu gani? Siwezi kuwa natoka hapa nafuga kazi na hapa ndio natafuta pesa na hiyo laini bado inakula pesa.
On the other hand, notable personalities were also on the receiving end of SIM card deactivation. Makueni Governor Mutula Kilonzo is one of the people that expressed their disappointment online. Senior Counsel Ahmed Nasir Abdullahi on his Twitter account stated that he was disappointed by the Safaricom PLC services as he threatened to abandon the network. Nandi Senator Simon Cherargei claimed he had been inconvenienced by the service provider. Taking to his Twitter account, the senator said, after 15 years of having at Safaricom PLC lines, they have decided to switch off their services today morning, inconveniencing me. Charles Kanjama and former Wajir women representative Fatuma Gedi also fell victims. The affected persons cannot access their M-Pesa services, make calls and other online services. According to the Communications Authority of Kenya, the regulatory directive seeks to curb online theft and ensure sustainable online control.
Sasa mimi wakati nimerejea hii line na feel poa sana juu hata ningefungiwa hiyo line nilikuwa na wasiwasi sana. Sasa hata nda communicate aje na watu wangu, hizo namba zitapotea.
I feel comfortable. I know I love no more hassles. Like if somebody needs to send me an M-Pesa, I'm just comfortable that it will reach me.
Even as the International Monetary Fund, IMF, puts pressure on the Kenyan government to cut all subsidies by the end of October, Ruto's government has seemingly fallen to the pressure to cushion Kenyans from the cost of living as the Energy Regulatory Authority maintained subsidies for kerosene and diesel in the latest pump prices review.
1 shilling for diesel and 2 shillings for kerosene, in what seems like a continuation of the prices that Kenyans have been paying for the commodity. The news around this latest review is in the detail. Ruto's government that got into power preaching the gospel on the unsustainability of the subsidies has been forced to retain them. Behind the 0.55% drop in prices of diesel, super petrol and kerosene is a continued partial subsidy for kerosene and diesel. Kerosene continues to enjoy a subsidy of 18.15 shillings a litre, while diesel attracted a subsidy of 27.47 shillings a litre as part of the reforms attached to the IMF's 270.2 billion shillings loan package. Scrapping off the fuel subsidy by October end was key in Kenya scoring the loan. How has Kenya been able to navigate these? Hard to tell, but maybe the delays in the announcements of new prices by EPRA point to intense background negotiations by relevant authorities. During the week after President Ruto was sworn into office, Kenyans had to wait till the 15th to learn what the new prices were going to be, an uncharacteristic of EPRA, with sources revealing the crisis talks called upon by the president. This time round again, Kenyans were kept guessing late into the weekend before the review by EPRA. Former President Uhuru Kenyatta's government already galloped 71 billion shillings in fuel subsidy by June this year. If Ruto's government continues with the partial subsidy, this figure is bound to jump substantially for a government that is already planning to cut expenditure by 300 billion Kenyan shillings. With a 1 shilling drop at the pump, Kenyans in Nairobi will pay 178.3 shillings for a litre of petrol, 163 for diesel, and 146.94 shillings for kerosene. The latest drop was expected as a result of the 10% decrease in landing cost of refined fuel, whose cost dropped from $117.53 to $105.96 per barrel. The real question is, what if after this month IMF follows up on the reducible minimums of cutting all the subsidies if Kenya is to enjoy a fiscal support by the lender, coming at a time when the OPEC Plus countries review daily production to less than 1 million barrels a day? For Lookupbusiness, my name is Wangari Njoroge.
Wangari Njoroge, with that story, the International Monetary Fund has indicated that the Kenyan government has not made a formal request for a debt restructure. President Ruto, in his inauguration speech, while identifying the debt situation in the country, indicated that they will be requesting for moratoriums and debt restructure programs from Kenya's bilateral lenders. IMF further says that Kenya's debt repayments are up to speed.
Such a request from the government of Kenya, and I think it's really important for me to explain here that the IMF is akin to a lender of last resort to countries. The resources we have are revolving resources that we need to use to help countries, from countries with stronger positions, countries that are in weaker positions, and the best help we can provide countries like Kenya is providing financing when access to financing elsewhere is more problematic. We have a strongly performing program with Kenya, and of course, hope that that will continue with the advancement of the reforms that the country needs. And should more financing be needed, we of course will look at that. But there's no request for debt relief from Kenya.
Let's move on to Kenya's Q2 GDP that has dropped to 5.2% in 2022 from a high of 11% same quarter last year. Data by the Kenya National Bureau of Statistics indicates that agriculture, which has been the major supporter of GDP, last year declined by 2.1%, contributing heavily to the drop. Lisa Maina paints a picture of what analysts are saying a slowing economy.
Even as the country grapples with severe drought that has affected 23 counties, the agricultural sector looks like it will not offer solutions soon as it continues to experience a drop for the third consecutive time, with Q2 of 2022 registering 2.1% drop. This comes on the back of 5.2% growth in GDP for the country. According to a report by the Kenya National Bureau of Statistics, this growth is, however, a drop for the same period under review, which was 11% on the back of the bounce back from the effect of COVID pandemic on Kenyan economy. Kenya National Bureau of Statistics attributes decline in GDP to an ever-weakening shilling to the US dollar and runaway inflation. The period saw inflation rise by an average of 5.9% in the second quarter of 2021 to 7.16% in the same quarter of 2022, driven by a rise in the cost of energy due to Russia-Ukraine crisis, as well as food shortages due to the ongoing decline in agricultural sector. The shilling has not got a reprieve against the dollar, averaging to 116 shillings and 33 cents from a low of 107 shillings and 73 cents in the same quarter of 2021. The rise in GDP, according to the Kenya National Bureau of Statistics, comes from the back of increased activities in industries like mining, accommodation, administration, and support-like services. Agriculture, which has been a main contributor to Kenya's GDP, experienced a contraction in forestry activities, fishing, drop in fruit business, 33% drop in vegetable exports, all these which the report pegged on the unfavorable climate conditions in the country. The drop in second quarter GDP throws a damper in growth expectations for Kenya's economy, which is in line with the recent review of World Bank, who last reduced Kenya's growth expectations to 5%. For Lookupbusiness, Lisa Maina.
Let's move into the last story that is going to introduce the next part of our show today, where Kenya Power is still drawing interest from investors at the Nairobi Securities Exchange, NSE, many days after the excitement of former Kiharu Member of Parliament Ndindi Nyoro's heavy investment in the stock. The week ended with KPLC still making appearances in the top 5 traded counties at the stock. Let's take a look at that.
It's not the news that the NSC is about to get a new look with the impending listings as President William Ruto plans. It is an unending rally that Kenya Power has seen since the news that Ndindi Nyoro has bought shares worth 40 million, roughly 2 months ago. With analysts expecting that the rally was going to be short-term, KPLC is in a sustained push to still remain relevant at the local stock. The week trading starting with Utamaduni daybreak, and KPLC moved a whopping 6.5 million shares valued at 12 million shillings at between Kenya shillings 1.78 and 1.84. This coming so close to Safaricom's 12.7 million shares in Tuesday trading, cementing the belief that investors have that KPLC will have turned its fortunes around. Wednesday saw somewhat depressed trading on the energy counters, trading only 3.3 million shares, a paltry 1.64% of total shares traded for the day, with KenGen turning majority of the volume at 464,000 shares valued at 1.5 million Kenyan shillings. Well, on Thursday, KPLC bounced back to its bubble, coming second after Safaricom by moving another whopping 9 million shares, feat only achieved in the week of Nyoro's announcement of increased investments. This week, market opens with KPLC still among the big boys in the club after clearing Friday as top 5 movers with 3,235,500 shares traded. It's clear that KPLC rally at the NSC was never short-term. What is clear, though, that the stock's yet to go back to the high price of 2 shillings a share. For Lookupbusiness, it's Sandrine Mwenda.
All right, let's take a look at the markets. And this is at that particular point then when I have to introduce our guest today, Arnold Medunga. How are you doing, sir?
Thank you very much. I'm doing very well.
Yes.
Good morning to you, Simba.
Fantastic. Everything is good. We're not complaining. Let's go back to last week and see exactly how the markets traded. And there's a point then when I have to introduce how the markets fared on. And I want us to look at what were the biggest gainers, because we do know that a couple of surprises there. Kenya Power has been rallying at the NSE. Then let's jump into that particular area now and look at what were the biggest gainers. And that is from last week's trading. And Arnold, yes, indeed, we do expect to start at EABL. They closed it on 171. And by the way, the biggest jump seen Friday, and that came in on Friday at a 23.91%. Arnold, for anybody wondering why we do have those numbers the way we do, what would be the response?
Yeah, so I think with the ABL, as you alluded to earlier, the announcement by Diageo to increase their stake and not delist.
Yes.
EABL was very, very good news as far as investors are concerned. And that's why, compare that also to its regional presence and performance over the past year or so, it's a good sign as far as the ABL is concerned, as far as the manufacturing industry in the country is concerned.
Yes.
Yeah, so it's a stock definitely to look at. That's in news which definitely gave investors a lot of confidence.
Yes.
And as far as the counters are looking, I mean, it's, the numbers are not lying. So it's a counter to have a look at.
Here's a conversation around EABL that I gotta ask you at this point, Arnold. We do know what they were doing just before this jump that came in Friday. I mean, it was a depressed counter. We did see them make appearances into the top 5 losers a couple of weeks ago. And by the way, in this month's trading. Now, we gotta say that Diageo actually did buy in on the decline on that particular stock. So the question is gonna be, do you expect that it's going to sustain its levels right here? Going by this particular jump is only as a result of that buy-in by Diageo.
Okay, one thing we may need to consider is the interesting year that 2022 has been.
Yes.
You're looking at a year which has been, we've seen the Russia-Ukraine conflict, and then we've seen also aspects to do with the drought, which really affect agriculture, which in turn affect manufacturing industry, and EABL is among them.
Yes.
And then the elections also, whereby traditionally in emerging markets, during an electioneering period, you'll see foreign investors sort of either dumping or releasing their stocks. So what we saw is essentially a mixture of things. And at some point in time, if you look at the NSE generally, we had a situation whereby local investors were actually taking up some of the stocks which had been dumped. So factoring that into the EABL stock, I think number one, Diageo actually made a good move as far as investing is concerned,
yes,
and as far as a business move is concerned. And I feel that with the election behind us and also with the raft of developments going on with the NSE as far as some of the government announcements are concerned, it's a stock which I think will stabilize at its position and probably be a stock to watch as we go into Q4 of 2022.
Pretty much. Let me rush into the next indicators from last week's trading. And we're going to look at the top 5 losers. And there is a surprise package there as well that we got to look at right now. In as far as that particular data that we're going to give you now is concerned, we have it. Yes, we do. In terms of the top 5 losers, we do have Safaricom. Again, Arnold, quick on that before we take a break. Why are we talking about Safaricom being a top 5 loser? We don't know. That's exactly where they should be. 25-30.
Yeah. Safaricom is an interesting monster. You realize as far as the NSE is concerned, at some point in time, almost half of market capitalization was Safaricom stock.
Yes.
And it's been a mixed bag. If you look at some point in time, the stock really went up because of the interest and investments in Ethiopia. And then at some point in time, you had news of Safaricom and M-Pesa essentially because of ongoings in the market as far as legal and corporate developments are concerned, for M-Pesa and Safaricom to essentially go their separate ways. So I think this mixed bag of information is what is causing those fluctuations. But as far as the stock is concerned, it's still a very strong stock.
Pretty much, because indeed we're talking about 25.30. We do know they did charge, they did get to 26, but 25.30 is exactly where you need them to be, because indeed, if we move on to the next one, which is the biggest movers from last week's trading in terms of volume, let's see what the big indicators are there. And indeed, we got to talk about Safaricom and equity being the top. But then, Arnold, when you're looking at Safaricom closing in at 555,000, what does that indicate? Is that a depressed market as of Friday?
Yeah, I think you're looking at, okay, last week, of course, the market had a break one day because of a public holiday.
Yes.
And then I think the information I've alluded to earlier also meant a wait-and-see attitude from some of the international and local investors.
Yes.
However, I think Safaricom, as I mentioned, is still a very strong stock. If they're about to announce their half-year results in the month of November, and I think that will also give us an indicator on exactly where the company is going. I feel that once those results are in, as far as the performance of the company is concerned, we'll have a very clear position of the direction where the stock is going. But as far as I'm concerned, I think Safaricom is still a very strong stock. No need to panic as far as the investment is concerned.
Pretty much. So no need to panic. That's the biggest takeaway. Now we do know exactly how the markets were Friday, and the reason behind it. We'll be watching EABL just to see exactly whether they get back to those numbers that they moved Friday at 23.95%. That's a big jump. Indeed, we've not seen it in recent past. I mean, this could be the biggest one ever. They say, and by the way, that's true, could be the biggest one ever. They say. Also saying Nairobi Business Ventures also rallying. We do know exactly where they're doing that. But for now, we do know that there is the vetting process currently going on at the 13th Parliament. The CESs are getting vetted. They've already done a vetting Salia Mudavadi for that senior or chief minister position. Now, they are vetting currently Justin Muturi. So instead of going for a break right here on Lookupbusiness, let's take you there. Once we come back, we do have Arnold with us as well as we look at Q2 data. Remember, economic analysts are calling it a slowed economy. Is that the same sentiment that Arnold is going to share? Once we come back from this little break into the vetting process going on at Parliament.
Cases, government will win or lose cases depending on how much legal advice the particular entity within which the dispute is located. If it is, say, for instance, the Ministry of Trade or Ministry of Finance, it is important that all those departments, first and foremost, before committing government to anything, must seek legal advice. Of course, once the advice is sought, it may or may not be acted on. But of course, with the attendant risk, when they don't act on that, on those opinions, that they could easily find themselves on the receiving end. And in a number of cases, in fact, in the majority of cases, government has found itself on the receiving end because the Office of the Attorney General is brought in many of those cases at the tail end. It is not involved at the time when the government was being contracted into some particular activity. And therefore, my personal view about this is if we have a robust, integrated legal management system which will sift through all government departments, just like we have IFMIS. It helps the principal legal advisor to government to know at every stage, at the earliest stage, what government is about to, what kind of arrangements or engagements the government is about to enter into, and advise appropriately. And therefore, I myself, in a proactive way, propose that I would introduce such a system. But of course, all that will only happen when there is sufficient funding to the Office of the Attorney General And this, of course, would involve not just the National Treasury, but also the National Assembly in ensuring that the office is properly resourced. But I also want to agree with the Honourable Deputy Speaker that indeed government has lost in cases where, if properly advised and been sought ab initio, that would not have happened. And I think tied to that is the issue raised by the Honourable Ishongwa, the Majority Leader, about the abuse of the justice system, but mainly the issue of those lost cases. The lost cases, I think I would myself want to deal with it as a matter that is now over and will not be resuscitating. But it is important that we appreciate that government, just like ordinary citizens, appear before courts as litigants, and should expect that in an adversarial system such as ours, they could either win or lose. But at all times, government should first receive the best available legal advice, especially before contracting. Some of the other smaller cases that government has actually lost has been, in my view, out of negligence, because many of them are either not adequately defended, and some not at all defended, and we find judgments being entered against government on account of either inadequate personnel or inadequate preparation by those charged with defending government positions in court. With regard to the question of abuse of the justice system,
maybe Honorable JB did not get my question. Maybe I could paraphrase it. My question was, and truly what you are saying is true, that some of the cases could have been lost by government because of negligence by officers in the state law office in not defending government properly. And therefore government has been surcharged, or rather as judgments against it that amount to amounts, some that are obscene for some cases. And cumulatively, if you look at all those judgments, I think they're moving close to R1 trillion shillings. And my question was specific. As AG now, knowing, as you say here, there might have been negligence by state law officers in defending government, what do you intend to do? Because we cannot subject the Kenyan people, Kenyan taxpayers, to pay those huge bills out of the negligence of officers in the state law office. So what do you intend to do if you are approved as the AG to make sure that you save on taxpayers' money, not even government money, on those judgments? That was the specific question I wanted to hear. What your intention?
No, on those judgments, if they have been finalized, there is nothing that the Attorney General will do, save to advise that the government settles those that have been finalized. Those that have not been concluded, of course, the Attorney General will take up the matter and apply the best foot forward in ensuring that government gets the very best out of them. But I'm saying, moving forward, not the historical ones, going forward, I think there is need for all government ministries and departments to ensure that they involve the Office of the Attorney General, especially before entering into commercial contracts, because some of them are entered into. The brief that I have is that some of them come to the Office of the Attorney General, and the Attorney General's office...
Well, now that is Justin Muturi, if you remember, that is the former Speaker of the National House. And Ruto's government is being vetted for the position of Attorney General. Now remember, this vetting process actually does take 1 hour. We've already seen Musalia Mudavadi come in, defend the CV. He's already spoken about what he wants to do in that particular office. Questions about whether he has a CV or not. Well, indeed, he's responded to a couple of those. He's made it clear on exactly what his agenda is. And they said, well, I'm here to step in when the president needs that technical advice in terms of running this particular country. Well, that is Justin Muturi as well, getting vetted for the position of Attorney General, currently ongoing. And we do expect that next is going to be Aden Duale. Those are the top faces then that President William Ruto wanted to put in his government as the year then for government business in his particular government. Good. Let's come back then to look at business right here on our Lookuptv. So we look at where we've been in as much as Q2 data. And I remember last week we didn't have those numbers by the Kenya National Bureau of Statistics, who indicated that our GDP had fallen back to 5.2%, going to how it was in a Q2 of 2021. But we're talking about it jumping to 11%. So the question is, are we on a decline? And that's exactly what we're here to chat with Arnold. Arnold, that's the question. Somebody want to ask you then, if you look at where we are right now, 5.2%, but then everybody is making a reference back to 2020. Because up to now, there's a question of, have we fully recovered from the COVID-19 pandemic? Could you help somebody put this into perspective? Indeed, if there was going to be any figure bigger than what we saw in 2021, then by now you'll be saying, well, the economy is sort of slowed down. So are we out of the hold of the COVID-19 pandemic?
Yeah, a very good question. I think we're in a situation whereby we've seen a lot of global events drastically affect the local economy.
Yes.
So as we've alluded to, the events of 2020 really affected the economy. We had a lot of things which had to change, a lot of slowdown in things. As far as markets are concerned, banking, manufacturing, etc., simply because there was no movement. And there were a lot of restrictions. And towards the beginning of 2021, we were talking about 2021 being the recovery year from COVID-19. And now with 2022, at the beginning of the year, unfortunately, we saw the invasion of Russia with Ukraine, which affected fuel prices, global fuel prices, which affected our local market. Now, our local market had not yet fully recovered, but we had seen signs of recovery.
Yes, yes.
Simply because movement was back. A lot of banks had done a lot of restructuring as far as credit is concerned. And there was a credit uptake, and we also saw the manufacturing industry sort of almost coming back to life. Given that, the assumption was that in 2022 things would be okay. But now with 2022, with the elections coming in, ordinarily in an emerging market, when it's time for elections, everyone holds their breath, so to speak, because you'll see that investors, particularly on the NSE, they will either hold on investing or they'll pull the investments just to see if the country will have a positive election. And if it does, in most cases, if you look back in probably go way back into 2002, when we had very, very good elections, we had a very good growth as far as the economy was concerned.
Yes.
If we could look at the other electioneering years, there's always a slowdown during an election year. And then afterwards, you see a recovery coming in. Now, the same thing with 2022, apart from the conflict between Russia and Ukraine, we're seeing drought. And also, when the elections came in, a lot of things sort of slowed down. And now we are seeing some sort of recovery coming in. We've seen positive positions being taken by the government as far as the Nairobi Stock Exchange is concerned, with the government promising to list at least 10 parastatals.
Yes.
We're already seeing private entities like Biofoods and Credit Bank going up, so we're expecting their IPOs to be announced. Now, the other flip side of the conversation is on the inflation. Unfortunately, inflation has really been going up. The cost of consumer goods has also really been going up. And that is again pegged to the price of crude oil and the price of international markets. And also some of the fiscal and monetary policies which are being adopted in places like the US, whereby back in 2020, the government was really essentially just dishing out money to stimulate the US economy. And now the government is actually doing the reverse. The Fed is actually increasing the interest rates so that they can curb inflation. Now, when the Fed increases interest rates, all the other currencies are being affected. And if you look at Kenya's situation whereby most of our debt is dollar denominated, it's really putting a strain on the Kenya shilling. And that's why we were talking about figures of 107. Now we're talking about between 116 to 120. Actually, we're looking at 120,
yes,
the current exchange rate,
yes,
as far as the markets are concerned. So it's a place whereby, depending on the government's moves, I've seen the government talking about introducing dollar-denominated debt, just to try and also bring in foreign investors, because sometimes the fear is you're investing in a currency which is continuously depreciating.
Mm-hmm. Yes.
So what is happening to your investment? So we're at a critical point. The one thing as an analyst I would say I'm glad about is that we've had a peaceful transition in this country. And that peaceful transition has brought about a lot of goodwill. We saw the delegation of the US paying visits to at that point in time, the president-elect,
yes,
which expressed a lot of confidence in the market. So going forward, as far as Q4 is concerned, we are waiting for results in the power industry. We will definitely be looking at results for commercial banks, and then we'll also be looking at generally counters like Safaricom, which is a very, very big counter as far as the NSE is concerned. So if you look at the general economy, I think the biggest challenge we have at the moment is the inflation. CBK data was talking about 9.2% inflation as we speak.
Yes.
Of course, KNBS, their data is a bit, there's a differential in the time period. But if you look at CBK data, they're talking about 9.2, which is extremely high. At the beginning of the year, we were talking of levels of about 5.6%. And month on month, it's been going up. Now, when that happens, it puts a strain on the local mwananchi,
yes,
so to speak. So buying of consumer goods becomes a problem, transport becomes a problem, cost of manufacturing and cost of doing business becomes a problem. So we're at a point whereby the new government needs to come up with ways which will be both short-term and long-term, so that it can assist the local mwananchi who's doing probably local business, the guy who's selling bread and, the local consumer goods, to the guy who's manufacturing the bread, to the guys who are giving finances, and so on and so forth. So we're at a tough point. The growth projection, as the World Bank has mentioned, will definitely slow down. But if the government puts fiscal and monetary policies which make sense, long-term and short-term, I think we will be in a good place. We have reason to be optimistic because, crucially, of the cool and calm transition which has happened in the country.
Pretty much.
Yeah.
So let me take you back a bit again, Arnold,
Yeah.
to what this GDP difference then means.
Yeah.
Because then are people saying that our economy has slowed down? That's the first school of thought. The second one, Arnold, is that, guys, look, you can't call it slowing down, because then if you go back to 2021, you're coming from a depressed economy in a 2020. So that jump in 2021 could have been essentially natural.
Yeah.
Then you look at this 5.2% in quarter two, then you will say, well, now that is the natural growth. Because we're not declining, we are growing from quarter one. But if you go back to quarter two of 2021, that's when you find this difference now coming in. Would that be the correct assertion, as opposed to saying, well, the economy is slowed down?
I think that would be okay. I think you see, when people talk about a slowing down economy, it's the projected versus the reality.
Yes.
So ordinarily, an emerging market like Kenya, the World Bank will normally look at figures between 5.5 and 6% year on year as projected growth, and they will peg that based on what they saw in the previous year vis-a-vis what is currently happening, be it investments, be it developments with international companies or organizations, couple that with what the government is doing at any particular point in time. Now, with 2020, 2021, it was very unique. It was very unique because any upsurge in data the assumption is we expected it. The markets are opening. The markets were closed. Now they are opening.
From where we were in
2020,
yes.
we even had an oil glut at some point in time. There was so much oil because of literally no movement, that prices actually came down. But guys are not really enjoying it because they're not moving.
Yes.
And now we have a situation whereby the demand suddenly, when you have sudden demand, then your data will need some sort of recalibration because it's not a natural position. It's like a leap rather than a gradual shift, be it upwards or downwards, depending on global or local developments.
Yes,
yeah,
pretty much. All right, let's talk about that particular impact that you're saying there, Arnold, the shilling. And I know you've touched on it, but somebody wanting to understand how the shilling itself is fighting the growth of our GDP. From you, other than just going into the debt scenario, what other area can somebody look at it and then say, well, you see now we're doing an average of 120. This is exactly what could be the problem when you're relating the shilling versus the GDP.
Okay. Now, ordinarily, there are several things. There are interventions which are normally done by the government to the CBK. And then there are natural trading activities which affect the currency. So if you look at what's been happening with the shilling, number one, we've been doing a lot of importation. We've been talking about a lot of, ordinarily we're a net importer, but when you look at a situation whereby it's costing you more to import, like with the rise of fuel prices, when it costs you more, when it costs you more shillings to buy what you normally buy at a certain, what you normally import, then it starts bringing stress on your currency. The other thing is what the Fed is doing in terms of increasing the interest rate of the USD. It sort of has a double impact on whatever stress you already have. So you're a net importer, essentially importing more than you're exporting, because we rely mostly on the agricultural industry, whereby we export coffee, tea, and a lot of horticulture. And we also rely on repatriations from Kenyans abroad. At some point in time, there was very interesting data about actually currency coming in from Saudi Arabia, controversially, which was supporting the shilling. So if you look at those dynamics of your normal balance of payment, so to speak, we ordinarily are net importer. And then if you look at the rise of fuel prices versus also the increase in interest rates by the Feds, that brings so much pressure on a currency which already has pressure. So if you exclude the debt, which also contributes, if you exclude debts, factors such as rise in fuel prices and also the rise in interest rates by the Federal Reserve of the United States, that brings a lot of pressure. It essentially means you need more shillings for that $1. Because the entire planet is also demanding for is placing demand on the same dollar. So in the most basic of terms, that is what is currently causing the rise of the price of the dollar.
I was looking at that data by the Kenya National Bureau of Statistics. It indicates that if you look at agriculture, by the way, and I want us to start analyzing it from there, Arnold, it is the biggest employer, is the biggest contributor to our GDP, and will always continue to be. But then they in quarter two, they declined by 2.1%. But then on the back end of that, they also do mention a couple of very, very important sectors in the economy where we did experience a growth. They were very specific on the financial services sector, which essentially grew within that particular period. Manufacturing as well, albeit still in the single digit, they also did experience some growth in a quarter two. Let's dial it back in the sense that if financial services sector is growing, I mean, I'm looking at the banks and the lenders in the economy, why don't you experience then a bounce back in this growth in the financial services sector? There seems to be a mismatch in between the growth of the financial services sector and the overall growth of the GDP within that particular period. From what you said, what would you think the disconnect will come from?
Okay. Now, ordinarily, I think the disconnect comes in this sense. You see, the financial services sector, most of their growth is because of regional expansion. And when you're talking about regional expansion, if you look at KCB and Equity and I&M, those are banks which have essentially made it their core business to expand regionally. And that particular expansion, it will mean a growth in their balance sheet sizes, it will mean a growth in their revenue, and ordinarily that will also mean whatever taxes they're paying and whatever GDP, gross national product we're talking about, it increases on that element. Now, when it comes to manufacturing, the data is dependent on several things. Number one, it's dependent on global market prices. And number two, is dependent on what time of the year we're talking about.
Yes.
And the demand. Now, if you look at things to do with horticulture, coffee and tea, depending on the time of the year, be it summer or winter, it has an effect, on the demand,
yes.
on the general demand.
Yes.
And when that happens, it either increases or decreases the growth.
Yes.
And that's why, from a basic level, when you look at it, you'll have a mismatch. You'll have a mismatch. There are times of the year whereby horticulture brings a lot of, when you, in Kenya, during Q4 Kenya, Q1 Kenya.
Yes.
Let me talk in domestic terms. Q4 Kenya, Q1 Kenya, you'll always see a huge surge in exportation of horticultural products. And when that happens, it normally supports our economy and also contributes greatly to the GDP. Now, when you go towards winter and the demand there goes down, it also affects.
Yes.
Items to do like coffee and tea, those ones at least year on year, because of the wide range of markets which we have, their growth from time to time is also, you can actually graduate it, and it's not normally highly pegged on the demand.
Yes.
So on most basic terms, that would bring a mismatch. If you look at the financial sector, you see a lot of growth, even their stocks performing, even their dividends which they're paying look very nice, but when you look at it vis-a-vis the GDP, you see a mismatch because of the difference in the nature of how these two businesses are conducted.
Pretty much.
Yeah.
So let's talk about the elephant in the room that Ken Bias did highlight in that slowed GDP recorded in Q2 of 2022.
Yeah.
Inflation. And they really did say, if you look at where we are in terms of inflation, we've grown heavily. In fact, there was around 7.16 thereof, from a low of 6 point something.
Yeah.
Arnold, you like to think that when we're talking about inflation, that in the economy, we will tend to adjust the prices of goods, the prices of commodities, salary payments in line with inflation.
Yeah, true.
Is that where the disconnect becomes? Where indeed, what we've seen Kenya do, and then they've got the green light to do that under Ruto as a government, is that they've continued to adjust inflation on these particular commodities within the economy, but then the employers in the economy have not essentially adjusted the salaries and the payment schedules for majority of the workers, in the end reducing the purchasing power of majority of those in the economy, hence a reduced GDP. Is that what it is? Or there are other things that we really cannot tell within this inflation or disconnect?
Yeah, I think, the inflation disconnect, it has been rapid.
Yes.
Particularly in 2022, we've seen a rapid growth as far as in the inflation of the general inflation of the country is concerned. And as you've alluded to, it affects the purchasing power of you and I. Now, when it comes to companies, I think most companies, they will look at their earnings, and it's just a basic level of engagement. And unfortunately, I don't know how as a country we may need to work on it, because you'll find a situation whereby if a company is ailing in terms of the output that they're having or the income that they're having, then they may not be in a position to translate that to the earnings of the employees. Yeah. Now, what may need to happen, probably some interventions from the government may need to come in just to cushion the employers so that they can be able to also pass that cushion to the employees.
Yes.
It's a bit technical as far as fiscal and monetary policies are concerned, because ordinarily, in the event there's inflation, you've seen like the CBK has enabled banks to do risk-based lending so that credit is not stifled simply because someone has a high or a low credit rating.
Yes.
So as far as that front is concerned, we seem to be having a solution. But what you're talking about in terms of salary adjustment vis-a-vis the market is something which we are yet to adopt. I don't know if we may need to introduce some form of legislation. That is up for debate.
Yes.
But I think most companies will definitely just look at their balance sheet and they'll ask themselves, do we lay off guys and do increments on the guys we retain? Or do we retain guys and then basically just maintain a status quo until revenues are reflected on our balance sheets?
Yes.
Yeah. So I think that's where we have we may not be having a legal framework which covers the entire country. And that's why some employees, it's erratic. Some employees will adjust, most will not.
In fact, some of them would adjust, isn't it?
Yeah, some would adjust.
As we clear, Arnold, then, I mean, if you look at the factors on the ground right now, even as we talk today, OPEC Plus has already said we're going to cut production of oil. So we do expect that in the next review, the prices are going to be higher than what they currently are. We've seen what central banks across the world are doing. They are not relenting on the interest cuts. You saw what the UK government is doing, changing in any finance ministers who come in and tell them cut down on interest rates. So we do expect that inflation is going to keep on going higher. From where you said it now, going by the current drought as well in the country that we're fighting with at this particular point, do you foresee a lower GDP come Q3 numbers, or are going to be slightly improved? In 45 seconds, where do you see these numbers coming from? Okay,
now, very quickly. Of course, the projection for growth in GDP has gone down as far as the projection is concerned for Q4.
Yes.
However, going by the direction which the country is going, the country has an opportunity to get a facility with the World Bank. The country has also an opportunity to do a raft of changes within the economy, which can actually stimulate the economy. However, going by what you're talking about, central banks around the world are increasing their interest rates. Fuel prices are likely to go up. We may actually see a slowdown going by those factors, because ordinarily whatever fiscal and monetary policies adopted by the government may not be instant. They may take some time. So whatever we'll be expecting in 2023 will definitely be dependent on what the government does vis-a-vis what exactly happens. But we are likely to see a slowdown from where I see it. However, data could change, information could change, and we could actually see an upcharge. But from where I see it, and with the current data, we could see a slowdown.
All right. That's not a very good prediction, especially that's not a good way to end the year. Arnold, thank you very much for coming, man. Always a pleasure to have you around.
Thank you very much.
Good. Now, those numbers over Q2 in perspective, and that bold prediction from Arnold that it doesn't see that go up. And by the way, the general growth for the economy has been downgraded by some entities like, of late, the World Bank, that has said that we do expect to be around 5.2%. Might be lower, according to them, depending on exactly how we mitigate the current crisis that is facing the country in terms of drought, and also implementation of different programs that might come in to mitigate the current economic crisis across the world. Guess what? We end it here. But for now, I want to hand you over to Parliament, where currently we are seeing the vetting of the different nominees to different CS positioned in Ruto's government. We've seen the vetting of Musalia Mudavadi, Chief Minister, and currently Attorney General to be, that is Justin Muturi, remember the former 12th House National Speaker, that is currently ongoing. We do expect that Aden Duale for the position of defense is coming in as well after Justin Muturi. So look at those pictures, and thank you very much for being a part and parcel of this. Take him back to the time that he came to the studio at Lookuptv across all your social media platforms. I am Kiage Simba. I'll see you tomorrow.